Hello and welcome to The Big Fight. I'm Nidhi Razdan and our big focus once again this week is the Indian economy. The GDP numbers are out for the second quarter and they are not good. GDP growth in Q2, that's the second quarter of this year, is at just 4.5%. That is a new low actually in more than 6 years. At this time last year, the quarterly growth stood at 7%. In the last quarter this year, it was at 5%. So you're seeing a steady decline of India's growth rate that has been taking place, particularly over the last 12 to 18 months. There's more data that has come out as well. Manufacturing, and this is very important, manufacturing has contracted to minus 1% versus 6.94% at the same time last year. So the year-on-year difference is huge, at 6.9% last year to minus 1% right now. In the agriculture and construction sectors as well, we see that growth is down by half year-on-year. Those figures also on your screens. Core sector output has also contracted further for the month of October. It was minus 5.2% in September. It is now minus 5.8% in October. 6 of the 8 core sectors have witnessed a decline in the month of October. That's also important. Exports have also dipped by 1.1% to $26.3 billion in October. Now, despite these numbers, the government says that India's fundamentals are still strong and that the economy is going to bounce back, they hope, from the next quarter onwards. Dr. Manmohan Singh, the former Prime Minister himself, a renowned economist, has also said just in the last few minutes that 4.5% growth is unacceptable, and he says that there is a need to change the economic climate from fear to confidence. Now, if you look at the overall economic data, not just the data that we've put out, but other data as well. When you look at car sales, for instance, car sales are down. Factory output has shrunk. Exports have gone down. Tax collections are low. And perhaps more critically, we also now know that demand is low and rural demand is low. That is as per the government's own data, which it decided to distance itself from just a couple of weeks ago. So all of these are red flags for the economy. The only thing that is actually not showing any signs of a crisis is the stock market, which keeps hitting some kind of all-time high or the other every few days. So that's something we need to try and understand as well. If all these other critical sectors are not doing well in the economy, why is it that the stock market is showing confidence in the economy and in the government's policies? Now, the government has tried in recent months and weeks to take certain steps to give the economy a boost. We have seen the corporate tax rates that have been slashed. We have seen a special real estate fund being set up, merged banks. Also, the biggest privatization drive in recent years has been announced. The question is that going to be enough to boost the economy? I'm going to take that straight across to our panel on The Big Fight and begin with their opening statements, beginning first with Amitabh Dubey, a political analyst and policy coordinator for the All India Professionals Congress Group. Amitabh, your 1 minute.
Nidhi, remember when Prime Minister Modi came in with a strong mandate in 2014 originally, he promised Achhe Din. And the irony is that the growth rate we see today is 3 percentage points lower than the 7.5% we saw in the terminal quarter of the UPA before the first Modi budget. I think this is a tragedy for the country, frankly, and is a combination of factors. Of course, not everything can be pinned on the government, but there was a huge amount of overconfidence that came in. They cruised in on an improving economy. They benefited from low commodity prices, and Finance Minister Jaitley said fortune favors the bold, which is an ironic comment looking at it now. And we ended up with a surprisingly timid reform agenda. And when things turned, partly because of the decisions the government made, whether it's GST implementation or demonetization, when things turned around, the emperor appears to have no clothes. And we now know that we have unemployment at a 45-year high. We have growth at a decade low. We have household savings that are very low.
All right, so your time's up. We'll talk a little bit more about what you said in a moment. Amitabh Dubey, Sanjeev Ahluwalia, advisor to the Observer Research Foundation, standing next to you there. Mr. Ahluwalia, your time starts now.
Thank you, Nidhi. Well, it's not a happy day for the government, right? I mean, I think we can be pretty sure of that. That's why nobody turned up at your talk show, except Mrs. Kumar Mangalam, who was hiding away in an office somewhere. Look, I think that there's one thing that we do need to look at, because I'm an optimist, so I tend to look at the silver lining rather than all the deep shadows that Amitabh is pointing at. And I find that if you look at the data over the last few quarters, the decline, the rate of decline is decreasing. And so we're going down a gently inclined hill, which we're not falling off a cliff. So what that really means is that we can hope that sometime in the future, next year, maybe the year after that, we do bottom out, and then we can then consolidate and begin to improve the economy after that. There are a few things the government needs to do which has not done, which I'll quickly name.
Since your time is almost up, I'll let you hold that thought because I will come to that, because your opening comments are actually very interesting. You're setting the stage for, as you said, looking at a silver lining in otherwise dark clouds, and I think it's important for us to talk about that in some more detail. Professor Arun Kumar is next. Professor Kumar, you've been warning about this. You actually have said repeatedly that these are not even the real GDP numbers, that the real data, it tells you another story. Your first thoughts today, your 1 minute.
So this 4.5% is really the rate of growth of the organized sector and not the unorganized sector. The data for the unorganized sector comes once in 5 years. In between, it's assumed that the unorganized sector is growing at the same rate as the organized sector, which is no more true after demonetization. So if you include the unorganized sector data, which comes from MGNRE, GS, credit, offtake, etc., then the rate of growth is actually negative and not 4.5%. You know, if it was 4.5%, consumption should have risen, but consumption we know is declining. Investment rate should rise. Investment rate is stagnant or declining. So where is the rate of growth going? And since the problem has come from the unorganized sector, the package from the government should have been directed the unorganized sector rather than the organized sector. Corporate sector is organized sector. Real estate, 1 crore house, 2 crore house is also organized sector. You know, other sectors also are organized sector. So demand has to be boosted in the unorganized sector, and that's where the real problem is. And that's why I don't see the silver lining until the demand increases, and the unorganized sector is 94% of the employment. If they don't get more employment, I don't think demand will revive.
All right, but you stuck to time, sir. I think you've been a big fight veteran. Let me go across to Ms. Lalita Kumaramanglam of the BJP now. Ma'am, you are the one bravely sort of coming on behalf of your party today. Not good days, but you know, how would you sort of sum things up in the first minute today?
Yeah, first, even though this cuts into my time, let me tell Mr. Ahluwalia I'm not hiding away. I've had major knee operation. I've had my right knee replaced, so I can't climb stairs. So I don't hide away. I'm a very blunt person and I meet things head on. Now, yes, it is not a very happy day for the government. I quite agree with that. But I also would like to say that, yeah, the clouds are dark, but they always have a silver lining. As Professor Kumar has said, that growth has probably bottomed out. It is certainly very low rates of growth, and I agree that consumption, especially in the rural areas, has not picked up, nor has private investment. But the government has brought in already certain changes in the economics, not only structurally, but also otherwise in terms of the disinvestment push, etc., all of which we expect will be realized sometime within the next 6 to 12 months, and the economy will pick up. We are not doing well, I agree, but there's no need to panic either.
All right. Well, Sanchita Mukherjee is a private wealth manager, the co-founder of a company called Blue Edge. Sanchita, from your perspective, what do these numbers say?
Thanks, Nidhi, for this show. I came in last month when last quarter when the numbers were again not so great, and again this time the GDP numbers are not that great. But however, I will now focus on not the when, what, how. I think because enough has been spoken on that front. I think yes, there was a delayed response in terms of addressing this current slowdown, and that's because the country was in a parliamentary election phase. But then the slowdown response was very prompt by the government, and the actions taken henceforth in terms of the corporate rate cuts which happened, the announcement of the real estate fund for the real estate sector, the conglomeration of the banks into 4 large banks, all went in to show that the government was not denying a slowdown. See, it all happened from last year's IL&FS blowout, due to which the entire NBFC sector and the credit situation in the country is in a dire mess. What I would like to say is that I think India can do much more at this point in time to come out of the slowdown.
Okay,
because that's something I would like to focus on tonight.
All right. But Mr. Mukesh Bhutani is our last speaker this evening. He's, of course, a very well-known tax expert, the founder of BMR Associate. Mr. Bhutani, silver lining, dark cloud, where are you?
Well, dark clouds you mentioned about manufacturing and construction, but the silver lining as I see is in the 2 sectors, the trade, hotels, transport, communications, which I feel 4.8% is not a bad figure, and the financial, real estate and professional services as 5.8%. I think the other point to be noted is a material rise in the government's fiscal consumption expenditure, and possibly this is attributed to government realizing that we are facing a slowdown largely because of the sentiments of the private sector, and hence we should up the expenditure insofar as government is concerned. Now, it's a different story altogether as to what this will do to the fiscal deficit, but I would like to believe that the silver lining lies really in the services sector. And what came as a surprise to me also is the real estate and the financial services sector, because I felt that given the real estate crisis and the financial services, it won't have grown as high as 5.8%. So that's the silver
So there are
lining.
some numbers that one can take heart from as well. Okay,
Correct.
having heard all your opening comments, let me take the first question on the panel today to Amitabh Dubey. You said that this government has had a timid reform agenda. Can I ask you, hand on your heart, even if the government had gone for radical reforms like land acquisition or labor law changes, etc., would the Congress have supported those? Isn't part of the problem the lack of political consensus in this country on big bang reforms?
It is true that we, in our political culture, opposition parties oppose a lot of things which perhaps in other countries they would be more supportive of. But let's keep in mind that this is the first single party majority in 3 decades, twice. So there's a material difference between the previous coalitions we've seen. And I'd like to remind you, your viewers, that Dr. Manmohan Singh in 2013 and before that in 2008, despite a weak coalition in terms of not having a majority, he went and pushed reforms in that led to the departure of many of his coalition partners, TMC and the left. So you have to bite the bullet regardless of opposition. And if you have a majority, I think it is incumbent on you to take the actions you need to, rather than be so sensitive that the first bit of criticism you flip around your ideology 180 degrees and go in a different direction, which unfortunately has been the case. And the problem now, as I see it, is that the economic thinking has moved away from economists to the Swadeshi Jagran Manch RSS mode. And as a result, you're seeing a move away from economically rational policies. A little bit of correction more recently, I would agree. But I think the basic mode of thinking has been taken over by the ideological right wing as opposed to the market-oriented
Interesting
right
point.
wing.
Lalita Kumaramangalam, would you like to comment on what Amitabh Dubey is saying there? And firstly, if I could ask you, would you say that it has been a kind of a missed opportunity? This is something, by the way, that the international media talks about as well, that with the mandate, the kind of mandate that Mr. Modi has had both in 2014, especially the first time around, obviously, that it didn't match the expectations that there were on the reform front. So when you look back, do you think that there should have been more that should have been done?
Look, I would agree that there are a couple of more structural reforms that are needed, but these are reforms that have never been tried by any government before, and despite us having a majority in the Lok Sabha, we don't have one in the Rajya Sabha. And it's only recently that perhaps we have been able to manage to push a few bills through, and those are really not very controversial bills. There are two things that I think most economists will agree upon we need in terms of structural reforms. Those are labor laws, especially agricultural labor laws and land acquisition, as you mentioned, but also when it comes to marginal farmer labor laws and the land laws that apply to those people. Without these reforms, it is extremely difficult to push up consumers' demand, whatever may be the SOPs we offer. Unfortunately, successive governments, and this I say as an economist, not as BJP, not BJP, whatever, that successive governments, because of our populist measures and the fact that this country is constantly in election mode, it's very difficult to come up with these reforms. I'm not trying to make excuses, I'm stating a fact. Secondly, the fact is that we have taken up structural reforms. Let's not forget GST. Let's not forget the repo rate cut that was just done by RBI. I think
but the GST
we're expecting a sixth one in a row.
That's not
great. Really structural, but nonetheless.
Ma'am, sorry to interrupt,
So
but the
would
GST,
be mistaken. I think it would be
the
unfair
GST
to just
collections
paint us
have
saying
not
that we
met
haven't done enough
expectations
structural
at all.
reforms. It takes time for these reforms to start showing results. And more than that, the government post-elections has been very responsive to this slowdown in the economy. So it's unfair to say that it's only the government's fault. Yes, there is a slowdown, but we are really, doing whatever we could. The disinvestment push that we're talking about now is we're going to net something like 1.5 lakh crore. all of that, it is
Ma'am,
expected to go
Professor
into
Arun
government
Kumar has an
expenditure.
intervention
And
on that,
while we
on
say
that
there
point.
is a big deficit,
So,
sometimes
you know,
deficit financing
She's
is
saying
needed
don't
to push up
entirely
investment
blame the
and,
government. There are, of
especially
course, there
push
are
up
other
consumer
factors as
demand.
well. But I have to say, just to butt in over here, which is that we were here on this program exactly 2 weeks ago when that data on rural spending came out, and the government immediately said, well, we don't agree with this, let's just, put it away. So if the government has to really tackle the problem, like with any other problem, you have to first accept that there is a problem. And that, to me, seems to be the big issue, that is this government right now more concerned about managing headlines than it is about managing the economy?
So you're right. They don't want any adverse reactions in the economy, adverse reactions politically, and that's why data has been a big problem. So whether it be consumption data, whether it be suicides of farmers data, whether it be budget data, there have been problems with that. GDP data also, growth rate, there have been 7 controversies in the last 4 years, But let me come to the question of structural reform. Without these structural reforms on land and labor in the period 2004 to 2008-9, we had an 8.5% rate of growth, So it's not that we cannot have higher growth rate if we don't have these structural reforms. We can. And in the last 5 years also, 3 times the rate of growth has become 8% according to official data. But it's not sustained. Why is it not sustained? Because of policy interventions which have led to a crisis, whether it be demonetization, whether it be the GST, which is actually faulty, and whether it be the NBFC crisis, because we had the banking crisis going on. So in other words, the problem that we face are internal problems. Sometimes the government says that it's because of the external, the trade war, etc. But that's also not true, because 6 quarters back, that trade war wasn't there. So in other words, we have to face the problem.
Decline started much earlier.
Yeah, decline started much earlier. So we have to look at the internal problem and solve that. Now, for instance, disinvestment is not going to do the trick, because disinvest only means that the private sector is going to invest and the public sector will use it only for solving its fiscal deficit problem. But that doesn't mean increase in investment. So disinvestment by itself is not going to do it unless the government decides to increase the fiscal deficit and use that for investment purposes. But that doesn't seem to be happening.
Sanjeev Ahluwalia.
So, Nidhi, I just wanted to join issue with my friend over here, Dr. Kumar. When he tries to compare what's happening today with what was happening between 2004 and 2008, and how he points to the high growth rates at that point of time. Now, without in any way denigrating what happened at that time, it's always good to have a high growth rate over there. But look, the basis of that high growth rate is what has led to the entire financial crisis today. The basis of the high inequality levels today can be traced to that so-called high rate of growth in 2004 and 2008. It is very easy to spin numbers either way. It is very easy to push up your rate of growth by infusing a lot of bank money into the system, which shows as good loans.
Is that what you're saying happened back then?
Sorry?
You're saying that's what happened back then?
That's what happened back then. That's the evidence. And so we don't want that kind of rate of growth, do we? What we want is shared, sustainable growth. And for that, you need land reforms. You also need labor reforms, so that the small industries and the micro industries and the medium industries can grow. But you also need 3 other things. One is you need to free up trade. Look, India historically is a land of traders. What were our old, industrial and business houses, during the Raj? They were traders. We've been good at trade. But ever since 1947, it is trade that has always been constrained, always been constricted, and that is why trade in India is high cost, and that is the reason why our farmers are not able to get good farm rate prices. The other thing is that, and this is something that this government has started doing, which I don't agree with, that we have this policy of having a very strong rupee, which is emulating maybe the US or maybe China or wherever, though China actually depreciated its currency to make its exports grow. But we have been following a policy of a strong rupee, essentially to reduce the cost, landed cost of our oil, reduce our inflation, right? But the problem is that that militates against exports, it militates against providing an automatic protection to our domestic industry, and that is one reason why you had to reimpose tariffs. So I think that is a poor policy which we need
You
to
think we're
look.
too protectionist? Do you
Sorry?
think we should have, are we
Rupee
too
should be
protectionist?
depreciated. It should be 80 rupees
No,
today.
was it a mistake not to be part of the RCEP?
RCEP.
RCEP?
RCEP is a very complicated issue. Look, we are sitting next to an elephant, right? And that elephant can completely
Subsume you.
yeah, you know, it can flood our markets. So we have to come to some workable arrangements with the with China on how trade between China and India is going to happen. And I think these are all dance steps. These are negotiations.
Okay, but
that should be
Professor
worked.
Arun Kumar disagrees with
Very
your
quickly, you know,
about the
if you look
growth
at the
rate
savings
earlier.
investment rate in the economy, from 1999, when it used to be about 22, 23%, it shot up by 2008 before the global crisis to 36, 37%. And that's the reason why the rate of growth of the economy picked up. And since then, the rate of growth has now come down to less than 30%, and that's why the rate of growth is declining. So it's not as if you're pushing bank credit. You know, in fact, that time it was the demand, because the growth was there, because investment was there, therefore the bank credit was rising. And today the banks are flush with funds, but people are not coming forward to invest, and that's why the problem is coming. So it's not simply that. Regarding RCEP and trade, I think the problem is our technology is very weak. You know, whether it be in agriculture, whether it be in other sectors, that's why we're not able to compete. And this grouping of 16 nations, which is going to be there, we'll be outside that. China is pushing for it because it's able to develop its technology. So I think we need to worry about our technology development.
But let's talk about this issue of sentiment. And Sanchita Mukherjee, let me ask you about that. What Dr. Manmohan Singh has said, that there is a need to change the economic climate from fear to confidence. Is there a climate of fear? Would you acknowledge that?
No, I would not acknowledge that at all. In fact, contrary to what Dr. Kumar was stating, I would agree with my other colleague over here, because a lot of these issues have been generated in yesteryears. These entire BAT NPA situation, the bad debt that the banks are struggling with, the NBFC crisis, the leverage, the savings rate in the economy. Let's look at some numbers. Now, second quarter, financial year 2013, we did hit a GDP number of sub 5%. Where did that come from? Why don't we talk about the entire asset price inflation, which led to an 8% kind of a GDP growth numbers in yesteryears in India? Nobody talks about the entire voluntary contribution of the single-handed asset price inflation which happened. Here the government is trying to do a fantastic job of cleanup of the economy. Now, cleanup takes time. Why have the capital markets rallied in today's date? You may ask me, you just put up that question, right? The capital markets have rallied because the capital markets realize that these numbers, these reforms, they're not done by a spread of the magic wand. It's not reflective today or tomorrow. It will be reflective 6 months hence. If it's not, then it's an issue. So investors who are pouring money into the country from abroad, they realize that this is an economy which is still there's a real interest rate. I mean, look at your inflation's at 3%. If you're growing at a 4.5%, there's a real interest rate.
Let me take that to Amitabh. Let me take that criticism to Amitabh.
What investors are investing in is a Nifty 50 or Nifty 100 companies, which is the organized sector, which, as Professor Kumar said, gets reflected in the GDP numbers and is doing relatively well despite all the problems. What has happened is that we can keep going back to what happened 10 years ago, but let's remember what happened 3 years ago. The economy was beginning to pick up, and then the government brought in A, GST implementation, which was problematic, and B, demonetization, which had a huge impact on rural markets, because rural markets are cash markets. And this freeze on cash totally tied up household balance sheets, agricultural intermediaries, and so on and so forth. And you've had a deflationary rural environment since then. And if you go back to the previous boom, the big growth rates were rural. Rural was outperforming urban all throughout that period. And today, rural is underperforming urban in a very severe manner. So the problem lies in rural India, and this can be traced directly to actions that the government took. And we're seeing the consequences in terms of household savings going down and so on and so forth. Because sentiment, which is the original question you had, sentiment of the consumer has been hit. So they've stopped spending, and therefore demand is decreasing. And the problem
What is the climate of fear that Dr. Manmohan Singh talks about?
The climate of fear is to do, well, there is a climate of fear in our institutions, in our judiciary, in the media, and so on and so forth. But what he's talking about is exactly the attack on the cash economy. What we need is remonetization, not demonetization. You can't expect farmers to start using Paytm overnight. You can't expect them to switch. This is shock therapy. In fact, I see the Modi government equivalent to a Marxist government in the sense that they want society to change overnight. They don't believe in incentives that lead to behavior change. They want to do it by fiat. And this is the RSS mode of thinking. And I think in a complex society like India, it's going to have a very serious negative consequence. And you're seeing that today.
Mr. Bhutani, your thoughts on the sentiment question?
So
Please speak without fear.
So if you ask anyone what is driving the markets today, you leave alone the top 10 traded stocks. Any analyst, whether he is a domestic investor or a foreign institutional investor, will say that the steps that were taken by the government to address the twin balance sheet challenges are yielding results. A case in point is the Supreme Court decision last fortnight on ArcelorMittal. They laid down the law very clearly. Now, for people like us, we knew that this was actually the intent of the law. But because of the litigative nature of our society, it took maximum amount of time to resolve India's largest insolvency case. Secondly, GST. I keep on getting this comment about a patchy GST. I in fact have another contrarian view. I think the government has really not taken credit where it is due for GST. So I don't think that the fall in the GST collection is attributable to a faulty implementation of GST. I think the primary reason is that we started with a set of assumptions on the GST rates. We kept on putting it down, perhaps for political reasons. I think the challenge lies more in our inability to move ahead. So it's been 30 months since GST law has come in, but we haven't subsumed the philosophy of one nation, one tax. Your real estate sector is still attracts stamp duty. Petroleum goods still is outside the GST system. So I think we need to move on to GST 2.0 or 3.0 in order to reform further. I don't think that there is anything patchy about the GST. The other comment that you often get from people is that the government is reasonably reactive to address. It took us 22 years to bring down the peak corporate tax rates from 30% to 22%. I think it's extremely reformative. And I think when the government took the bold decision in the economy that we are in, it was not at all worried about the impact it will have on fiscal deficit. So these are some of the steps that the government has taken, which is driving the sentiment.
I think the question though is, I think the counter to that is, and Professor Arun Kumar, bear me out on this, is that did the government end up contributing to lower growth by taking some of the steps that it did, like demonetization or the way that GST was implemented, to bring us to this point? Because, you know, we are at a crisis point. It can't be that everything that the government is doing is great. You know, there was a budget and a lot of stuff in that budget got rolled back just a couple of months later. Right. So, you know, what is it that the government does have to bear for this in terms of responsibility, and what is it that is actually outside the purview of their control, in your view and then in your view? Yeah.
So very quickly, you know, to react to Sanchita's point, when I said tax GDP ratio is changing, it's a ratio. When I say savings rate is rising, it's a ratio. It's not simply asset price inflation. You know, so in other words, what happened earlier, you know, where your rate of growth went up because the investment rate went up, savings rate, it's not just asset price inflation. It is because actually people were demanding more. Investment leads to greater demand, you know, and the demand is what leads to greater, you know, output increase. Regarding GST, it's faulty because the unorganized sector is getting hit very badly because of the GST that is there. And the government needs to admit that what has happened with GST, what has happened with demonetization has created the problem. Usually the government says it's coming from outside because the external economy is slowing down. That's not the real reason. Much before the China trade war started, actually the slowdown in the economy had started. It started with demonetization. And as I've been saying, it's the unorganized sector that's getting hit. Whereas we are all the time talking about the organized sector. The question is, if we want to revive the economy, how should the fiscal deficit be done? If the fiscal deficit is being created by giving more to the corporate sector, they're not going to invest more or save more unless demand, you know, increases. They're not going to consume more because they're already consuming what's required. So that's not going to solve the problem. So if we were going to create a fiscal deficit, how should we have done it? By spending more on the unorganized sector, by creating demand in the rural areas. That's 94% of your employment. And mind you, this 94% of employment has no labor laws. You know, they are hire and fire. You can employ them, you can do that. So what labor law reform are we talking about? Only for the 6%, not for the 94%, you know. So therefore, when we talk about reforms, we have to see what is it that will change that texture of the economy. The change of the texture of the economy will come when we begin to pump purchasing power down. And this is a global thing. George Soros says that we are paying very little tax, the rich should pay more taxes, you know. And that he said in 2012, he's again saying that now the European rich are supporting because capitalism is in crisis, demand is in crisis. That's why we are talking about universal basic income, because people at the lower levels don't have the income. In Switzerland, there was a referendum. In Finland, that's being tried. You know, World Bank is talking about universal basic income because people at the lower level have lost incomes globally.
That's an interesting point.
So,
sorry, I'll just get Mr. Ahluwalia on that.
Yeah, you know, Nidhi, the government has done a lot of good things. But, you know, unfortunately, these have all been very discreet and somewhat responsive steps that the government takes from time to time. What the government doesn't have is a cohesive narrative, right?
It's just a narrative problem?
No, it's not just a narrative problem, a cohesive narrative which spells out an agenda which is sort of substantive enough to actually give the country a direction, an economic direction. I'm not talking here of the social issues and all that. I mean, those are very important, but just sticking to the economic side. So I think you know we haven't seen that. You know, all the budgets. You remember Arun Jaitley's first budget was a laundry list, right? And all the budgets after that have been littered with good things. You know, like diamonds sparkling on every page. But what is the underlying undergrid narrative? For example,
if it is the big vision,
if it is, well, it's not vision, it's an agenda. If it is private sector investment, right, then why is it that the tax cut is coming after 5 years or 6 years of the Modi government being there? If it is a big state vision like China, then why is it that we are even trying to privatize public sector enterprises, and we're not really privatizing
That's
them.
A good point.
We're selling them, we're transferring them from one public sector undertaking to the other, right? So that's not privatization really. So I feel that the government has not, for whatever reasons, I have no idea. Those who know government well, Mukesh has been working with government for years now, would be able to tell us why is it that the BJP does not have a cohesive economic agenda that can drive not only the country but also private sector investment. So they can point to the agenda and say, okay, this is going to happen next year and the year after that and the year after that.
Well, you know, interesting you say that.
And one more thing, Nidhi, that you know, when we talk of reviving the economy, we need $600 billion infusion, $600 billion infusion to revive the economy. The government cannot do it. It doesn't have the money. Its budget is only 200 billion, right? So it's nowhere that public investment can drive a huge economy like India. We have to get the private sector in, the domestic private sector, foreign private sector, individual householders who save, you know. So it's a very complex problem.
But can I just sort of change track here for a second and ask Ms. Kumaramangalam that often, you know, when we talk about the economy, why is it that it doesn't figure in the political discourse more often? And I say this because in the election campaigns that we saw, for instance, in Haryana and Maharashtra, the economy was not the focus and it was already in deep trouble by then. You're not seeing that in Jharkhand either in the election campaign. Maybe it happens now, I don't know. But it should be a political issue. It is something that should concern all of us at top of the list more than anything else that comes on the election issue, like, you know, Article 370 and NRC and all of that. Do you think that the BJP now needs to make this a political issue and tell people what it's doing about the economy?
Look, in terms of election campaigns, let me be my usual extremely blunt self. A government that's in power is not the government that picks holes in its own fabric, so to speak. Now, it is up to the opposition to come up with economic, with problems of the economy and to lay it at the government's door. It was never done.
It can reassure people. It can reassure people about what it's trying to do.
I'm coming to that. Let me finish. I'm coming to that. Nidhi, if you let me finish, then, I mean, you know, if you keep interrupting, it's difficult for me to say what I want to say. Now, I agree that, yes, we need to make a better presentation of what our work has been. We need to be able to say, in order to also build up private investor confidence and thereby increase private investment, at least gradually over a shorter period of time than what everybody expects. we need to be able to say that, look, we have done some certain structural reforms and we are still committed to what we had said we are committed to, which is driving out corruption, driving up investment, private investment, and seeing that the country reaches a certain turnover in terms of GDP, not turnover, it's wrong, I'm using a business terminology for it. But perhaps we have not done that because in some ways we have been on the back foot always in terms of critical, extreme criticism, more often than not very vicious, in terms of the politics of the BJP or the so-called right. Now, having said that, let me also say that it's not as if the BJP government has not achieved any economic milestones. We pulled 300 people out of, million people out of poverty in the last 5 years. I'm not saying other governments haven't done a good job, but we have done a pretty good job. Yes, I agree we need to sell our economic reforms and whatever we have in terms of economic plans for the country better. But well, we are nowhere near, I have to admit, as good at PR as the earlier governments were. I'm not making any unfair comparisons.
I honestly don't think the problem is with you selling your reforms. I don't think that's the problem. I think the problem is the lack of reforms themselves. Because again, the whole, it seems to be veering to this argument
I don't think you can say
about
that is
controlling
unfair.
the narrative.
There have been
It's
reforms
not.
that have never
I think
been
the
even
government
done,
needs
thought
to
of
move
before.
away with this obsession
Whether
about
it's
controlling the
GST,
headlines,
whether
the
it is
narrative.
RERA,
That's
whether
why you
it
didn't
is
want to have
the
that
fact
data,
that we have
NSO
had
data out on
NBFCs come out of the problem,
rural
etc.
consumption
It's
being down.
unfair to say that we have not taken up reforms. Reforms don't kick in immediately, Nidhi. It takes at least 3-4 years for any reforms to start working.
So we have to wait
so
4 more
let's
years.
not jump the gun and say that we haven't done reforms. That's totally, in fact, it's not even factual.
Economy as a political issue. Why it needs to be about, you know, there was a debate in Parliament, by the way, the other day on the economy, and there was hardly anyone sitting there. Forget the government benches, even the opposition benches were empty. It was embarrassing. And this is, everyone says front and center, bahut bada issue hai, biggest issue of the day, blah, 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 blah. In Parliament, it hardly figured. I mean, I'm sure you were disappointed to see that.
So, I mean, Ms. Maranganam is correct that it is for the opposition to bring these issues up and not for the government to poke holes in its narrative. And I think the opposition has been doing that. I think the problem with the government is that it is a machine that is so focused on winning elections and being ahead of whatever popularity contest it's focused on, is that it drops a ball on problems. So it went from an economic agenda, you remember Make in India, Make in India, Make in India, and now we have contraction in manufacturing. And by then we've moved on to nationalism and Balakot and other things, and then on to NRC and then on to the next thing. So I think one of because of this, it drops a ball and loses focus on these things. And we've seen this, as Mr. Ahluwalia was saying, lack of coherence on an economic agenda. So you have a policy that in any other time would be welcome, a corporate tax cut. It's a great idea. India's corporate tax rate is higher than the world average. But they do that at a time when what you really need to do is put money into the bottom of the pyramid because there is demand contraction going on. So what you need to do is, instead of giving away 145,000 crores to 0.7% of the firm, 145,000 crores, 1.45 lakhs, to the 0.7% of the firms, not the small, medium firms, but the Adanis, Ambanis, and the Nifty 50, 100, and so on. So that shows misplaced priority, because then you've used up your ammunition for the next thing. And meanwhile, PM Kisan is being implemented in a very haphazard way. Only half of the target audience has received any payment from the first round that was due in March 2019. So, you know, once the election was over, they dropped the ball on that because it wasn't so necessary. So I think there is a lack of coherence, and they really need to get focused and get moving, because it's in their own self-interest to do it.
So let me ask everyone, you know, what their suggestions would be going forward, because now we do know what the problems are. Mr. Ahluwalia, to you first. If there were 3 things that you wanted to recommend to the government that need to be done in the short term, medium term, what would those be?
Well, I mean, first, just to respond to Mr. Dubey here, that, you know, I think it's a little unfair to point out legitimate tax reductions which are given to the big public sector, the big private sector.
Yeah.
And the public sector, by the way. I mean, even the public sector is big and they also benefit. Big corporate sector, because it should have been given to somebody else. You know, I don't think, as far as economic planning is concerned, it really works that way. You should have a very solid small industry sector. Unfortunately, you don't, because of the policies that we have followed for the last 70 years with respect to the small and medium sector. These are companies which are old but haven't grown. So you have old, stunted, small companies sitting there because of the benefits you've been giving them. Even if you give them benefits today, those guys are just going to eat it. They're not going to be able to do anything with it because they're in the wrong business, they don't have the technology, all those million problems that they ask government to solve. So that's on the thing. I mean, I think that it's a good thing that they've brought the rates down. Yes, the fat cats will benefit, but don't forget that the fat cats also have shareholders who are people like Mr. Dubey and me and you and everybody else. They employ millions of people with very good jobs, which is what everybody wants. Those people then provide tertiary employment to others in the services and so on. So it's not a complete wipeout. It's not a throwaway. It's a judicious decision and it's a good thing to do.
So
however,
it's straight to those people. That's the difference here. I say
Yeah.
rather than go through me and him, just give it straight to the people who need the money.
Well, that's another option. That's another option. So three things that you asked for. I would say that the government should forget about its political affiliations with the trading community, and they should go all out to liberalize trade at every level.
Okay,
So that we
liberalize
can
trade, yeah.
free up, the kind of stranglehold that trade has on the Indian economy.
Next.
And I've already said that you have to depreciate the rupee,
Yeah,
so that
okay.
you protect your domestic manufacturing, you give an incentive to your exporters, and you do not have to violate WTO and other norms by imposing very useless tariffs on our imports.
And the third?
And the third thing is that we have to hunt around for ways. They have to develop an economic agenda that will get 600 billion private equity investment into India. That's what will revive the economy.
Okay, well, Professor Arun Kumar, to get your suggestions, the Chief Economic Advisor in fact has given out some data to reporters saying, additional data, saying that on employment, they did a study claiming that regular salary workers, their employment has increased by 5% in this quarter. Basically, in the organized sector, employment has gone up by 2%, but in the unorganized sector, there's been a further job loss of 2%. That is what the Chief Economic Advisor has said. Now, with that additional information in mind, what would be your suggestions to the government at this point?
So, the situation is quite grave. When in 2017-18, the government data showed the rate of growth was 8%, 7%. Consumption in the rural areas was declining. Today, when the rate of growth has come down to 4.5%, you can imagine what would happen to the unorganized sector. So the real problem is in the unorganized sector. And if we are to increase our fiscal deficit to solve the problem by giving corporate tax cut, by giving to the banks and by giving to the real estate sector, then the question is, how should the fiscal deficit be used to boost the economy immediately? Rather than over a long period of time. And that's what my argument is, that if we are to boost the economy rather than give tax cut, we need expenditures. Expenditures is what leads to demand. And that's why, RBI shows that capacity utilization has been going down. When capacity utilization goes down, private sector will not invest. It will not increase its investment because it already has spare capacity. So therefore, boosting demand is the first thing. Where would you get a boost in demand? You put money into the unorganized sector, into farming sector. You do that through investment in education,
So you're saying
investment
ignore
in
the
health.
fiscal deficit and just do it?
No. So fiscal deficit will rise. The question
will,
is, how
that's what
should
I'm
it rise? Should it rise through tax cut or should it rise through expenditure? That's your option. And the second is, how much should it rise? I think it's already running at roughly about 9 to 10 to 11%, because if you take the states, you take the public sector units and the, off-balance sheet, items, I think they're running at about 10 to 11% fiscal deficit. So question is, how much more can we raise it? And if we are to raise it, where should it be spent? And that's where my argument is, put it into employment generating activity like education, like health, rural development, that will boost demand, that will boost the demand for the industry, and therefore the industry will start doing well.
So you're saying spend, spend, spend.
Spend by spending on where? Not on this thing. Second point is, GST has created a problem for the unorganized sector. It needs a big reform. We need to go to a last point tax like in America, because 5% units pay 95% of the tax. Leave out 95% where the problem is coming out, and you'll find that there is a solution for the unorganized sector over there as well. Then finally, disparities have grown dramatically, as the World Inequality Report shows, as the Oxfam report shows. 1% have more wealth than 50% of the Indians have. 9 Indians have more wealth than 700 millions have. So if with this massive increase in wealth disparity, you need to do something about wealth taxation, estate duty and gift taxation. If you do that, you will get the resources. Without increasing the fiscal deficit, you can increase expenditures.
All right, Sanchita Mukherjee, what would your suggestions be?
Right, you asked for 3, I'll give you 6 very quickly.
Quickly.
India needs to go through tremendous aggressive reforms right now in terms of enforcement of contracts, legal contracts.
That's a good point,
people
yes.
registering properties, paying taxes, resolving insolvencies and so on. What stops us from setting up a bad bank, for example, shifting the NPA into bad banks, getting this entire credit cycle started again? We are dealing with a huge NPA situation, due to which I think it is affecting the demand somewhat in the rural side, especially now. So setting up a bad bank. What stops us from liberalizing certain labor laws for companies, making it more flexible for if companies are employing less than 500 workers? What is stopping us from pushing forward tourism? None of us talk about tourism. India has massive potential as a tourist destination. If there is concerted, direct effort in promoting tourism, we can double the arrivals in the next 10 years. What is stopping us, what he rightly mentioned, Mr. Ahluwalia, in setting up a new trade and industrial policy with focused few countries and prioritizing 8 to 10 industrial sectors with which we can have a trade agreement with? We used to have this for automotives and pharmaceuticals. What is stopping us from extending this corporate tax rate cut to direct tax reforms for the entire population? That will spur demand. We can do all of
I'll
that.
bat for that any day. Okay,
We
so
can
you've
do
actually
all of
given
that
some-
without
Yeah.
hurting the fiscal deficit by aggressively going for disinvestments. We need to do that, and that needs to be done pronto.
Mr. Bhutani,
I
are you
have
going
very
to give us
strong-
3 suggestions, 4 or
I
6?
have very strong views on tax reforms.
Please. This show is called The Big Fight. You're most
I
welcome
feel
to.
that many people were shouting above their voices to say that 25% reduction in corporate tax rate was not delivered for 4 years. Now that the government has delivered 22%, we are saying that we should move to a high tax country. I have very strong views. I think levies such as wealth tax, inheritance tax are regressive. As a country, we are not prepared for that. Number 3, I think we should continue with renewed focus our insolvency and bankruptcy court to address the twin balance sheet problem. I feel that we should have more tax reforms. I think that the government has not been very transparent in indicating what happened to the committee that was drafting the direct tax code. The finance minister should make a clear statement. If the government in its wisdom decides to junk that report, it should come forward and make that statement. And finally, I think we should fix the glitches on GST. I think the glitches lie from the GST system to the addressing the dispute resolution system. I also feel that these small and medium enterprises are the ones who are the largest non-compliant of the GST, and still there is a lot of tax leakages that is happening at that level as well. And lastly, I think we should open up whichever sectors are left out for foreign direct investment. I entirely agree with Sanjeev that insofar as funding is concerned, besides the direct investment, we should invite more and more debt funding into the country to fund the infrastructure projects and make other forms of investments in the country.
All right. Well, thank you very much to all of you for joining us this evening with some constructive suggestions about what the government can do next. Here is hoping that it does actually get better from the next quarter, which is what the government says may actually happen. Thanks very much for joining us.
Thank you.